Good morning. It is Friday, September 6th, 2024. This is Option Pit Live. I am Mark Sebastian, your only option. I am joined by Alicia J. Leslie, Queen of the Candles. Good morning, Alicia.
Good morning.
Non-farm payrolls are out. Let's hit that. U.S. labor, August, non-farm payrolls up 142,000. Consensus 161,000. August not unemployment 4.2%, consensus 4.2%. U.S. average hourly earnings 0.4%, or 14 cents an hour to 35.21 year over year, 3.83. I don't have what the consensus was there. Looks like about in line. And private sector 118,000, government adding 24,000 jobs. So weak, not catastrophically weak, is the number, the number that I would interpret out of those payroll numbers. What's your initial take?
Not catastrophically weak.
Yes.
I think that sums it up. Weak,
yeah,
but not horrible as everyone thought they were going to be. How about that?
And I think this lines us up for the quarter point basis point cut that everybody sees is coming with the FOMC. I don't know how you make a 50 basis point rate cut with inflation still over 2% and job growth still happening. But
I don't know why we have to meddle at all.
Well, clearly things are weakening a touch. So they, the bond market is gonna like that a little bit. Let's talk about the reaction off the bat. We did get a little bit of a bounce here. Futures were down. Futures about a 20-point bounce off of that initially. We'll see if it lasts. Currently, S&P futures are down about, call it 10 points. NASDAQ futures, which were really weak, still down about 90 points. We got some really bad earnings mixed in there as well. VIX futures are off about, call it 20 cents. And just for fun, let's look at the Russell 2000. It's down about 14 points. So markets are still lower, but they are better than where they were. And Alicia, I feel like the market is kind of walking on eggshells, trying to avoid the floor falling out. Talk to me about what you're seeing in the charts.
It sure feels that way, doesn't it? It's just, for me, it was breaking that 55.62 on SPX, which is now our big resistance level. But everything's turning negative. Our MACD's crossing over. If I could show my screen, please.
Are you sharing that?
Oh, I'm sorry. My fault. I'm sorry. That's what happens when you start late.
No, I get it.
There we go. How's it? Can you see that?
Yes.
Thanks, guys. Sorry about that. Yes, this all-important 55.62 level for me was the breaker, that we were going to roll lower. And I still think we are going to roll over. We're working on closing this gap created on August 15th. So watch that level. It's not too much further. Our first support level will be there at 54.16. And then below there, we have some support 54. Wait, what did I say? This is not 54.16. I'm sorry. 54.63. And then 54.30. So 54.63 and 54.30 are the levels I'd be watching on the support side, and then 55.62 on the upside.
Yeah, and interestingly, for kind of the second day in a row, the S&P has been kind of playing around with this convergence in the 50 and the 21-day moving average, which I think is kind of interesting. The 21-day moving average is 55.16. The 50-day is what, 55, something or other. They're like on top of each other. I think it's 55.06.
They're right there. They're right there.
Yeah, we literally closed 3 points below those levels. And the S&P actually, that chart looks a lot better than what I'm seeing in the NDX, which is the index for the triple Qs. The triple Qs look like if you took Apple out of the triple Qs, this chart looks terrible. And Apple has been. So after we look at the Qs, I want you to pull up the chart of Apple
Sure.
because the Qs not recover the same way the S&P did, the Dow did, and the 2000 did, coming off of that yen carry trade, and now have sold off than the S&P 500. So I'm wondering, where are we in terms of those levels for you, Alicia?
Well, as you say, so the Q is kind of the same idea as the S&P, but they, like you said, they had never made that double top that the S&P 500 had. So they were kind of weak on that rally. I have support just below here, 457.29. But if we break that, I have 447.40, and then revisiting down here, 434. Kind of wallowing. I would call this spinning tops on both charts. And usually that's a little pause, consolidation before continuing in the same direction, usually. Our RSI has gone negative. And we have just Tuesday flipped, the MACD has crossed over. And now we are actually crossing the zero line on the histogram, which adds another bearish argument for both charts, SPX and Qs.
That 100-day moving average is right where it keeps closing the last 2 days, which is acting a bit like a magnet. But today feels like maybe is the day that we did break away one direction to the other. Initially, like I said, they are buying this report a little bit from, initially off of those earnings, although the NASDAQ is still really weak. But Apple is, if you're looking for bullishness, Apple's up pre-market.
Well, look at Apple. I have Apple, after consolidating this whole 2 weeks here, it had broken out, but then faltered with a shooting star candle there, faltered, came back and revisited support here, closed right around there, creating a nice hammer, which could be a change in trend, which was this mini downtrend. We held the support yesterday, and we may try to revisit the median line here, 229 again in Apple.
Yeah, I'm interested in it. It's been pretty incredible, because the rotation trade has basically been out of everything else in the NASDAQ 100, even in those grade 8, those major names. And that money is just basically poured into Apple. Even Microsoft isn't garnering a lot of love here. NVIDIA had caught that big upswing and then now right back down. But Microsoft can't catch any love, and it's the second largest company in the world.
I have support just below here in Microsoft, 401.64. Kind of makes sense, like 400, right? And then that previous low, 385, will be support.
Yeah, and if you want to know why the NASDAQ is already down so much, I don't know if you saw Broadcom last night. So Broadcom is AVGO. They call Tesla is in the Mag 7. We dropped the word Mag 7 here at Option Pit. We call them the Great 8 because we believe Broadcom, which is bigger than Tesla, actually belongs in that discussion in terms of the major players that move the NASDAQ around. And Broadcom pre-market, they're pricing at about a little bit less than a 6% move. It's down 6.6%, a little bit outperformer, down $10, 142.5. Let me guess.
Yeah,
That
that's
lands
right
right
in
at.
the middle of my channel here.
Mm-hmm.
Below there, I have support and Broadcom 138.40. And then if it tries to close the gap up here, there'll be resistance 146.60.
Yeah, well, depending on the day, it could be, it could we might that 138 level might be an area that we visit. Um, and Broadcom reported great earnings. They beat consensus on top and bottom line and raised guidance, but it wasn't enough.
Right. Amazing, right?
Well, we've been telling people, if you want to know whether these like AI names, and it's like these really big AI names, NVIDIA, Microsoft, Broadcom, if you want to know if they're going, you got to stop looking at consensus earnings. That's not the one that matters. Go through all of the earnings estimates and find the pie in the sky number, the highest estimate out of all of them. So the consensus was 142. They came in at like 144. I guarantee you there was some analyst that had said 152 or something along those lines. That's your baseline number. If it doesn't beat the most absolutely bananas insane estimate coming from some analyst from, I don't know, Brown Brothers Harriman. I don't think that's even a company anymore. But, from some rando analytics house, then it is not going to make it. So do you have other charts that you want to look at this morning?
I think it's hard to not talk about how badly crude has been pounded.
I ask you, Mark. Yeah, crude.
Oh, look, a little green candle today. It's amazing. It hits every time that it's tried to pop up, it gets clobbered.
Yeah.
And each lower high, now we're having lower lows. I do have support down here at 67, but look, watch for the change in trend candle. I honestly think this is overdone. My red median line here goes back to 2022, 21, and we're trading below that.
I mean, we're at levels that, we're back to, some levels that we don't normally, that crude has found a bid on multiple times. So
yes.
I'm with you. I think it's at an interesting level here. And some of the crude names are, I think, for sale.
Oh, yeah.
This is one we're going to be talking about on Monday at our ticker highlight show, Occidental Petroleum. You'll want to hear what we have to say about this one. But, basically, if you're not Exxon or Chevron, which continue to get kind of pulled higher, like look at Oxy and then look at XOM.
Yeah, they just managed to stay right in the range.
Yeah. But Oxy just gets absolutely just slammed. And the crazy
they all
thing
have Slob and Hallie, all of them. Look at Slob, new lows.
Yeah. Well, and the hilarious thing is that, when oil was back, if you look at a name like Oxy, in December 2023, crude was significantly lower than where it is now. And Occidental was 10% higher. And which is kind of interesting. So how hard they've punished these things.
Yeah.
So I do think they're oversold.
I would keep an eye on USO.
Mm-hmm.
I have USO down at the bottom of my pitchfork. Could be making a low here. Watch, don't hop in too early. As always, wait for the price to reveal itself. It shows some bullishness. This could be one. This is a mover once it starts moving, as you can see. I have my eye on USO looking for that change and trend, that pop possibly, and ride that higher. But like I said, wait for it to reveal itself that it's going higher.
Yes. Any last chart that did you have any other charts that you wanted to look at? I'll throw one more out and then we'll hit some headlines. GLD.
Oh yeah. Or gold futures.
Gold futures, yeah. That either or.
We can look at GLD too.
Yeah.
They are just marching slowly, ever so slowly, but they're marching higher, and they've held my support here. These previous highs are always resistance. Once it busts through there, 25, 40, 41, and I as long as it holds this, 2,500, I think it's just slowly marching higher.
It's a turtle march, but it's a march.
Yeah.
All right.
Yes.
So GLD, kind of the same story. Different chart.
You want to see
it doesn't trade futures trade 23.5 hours a day. GLD only, officially 6.5. So the charts do look slightly different.
So those previous highs, there'll be a little resistance, but I'd say it wants to trade up here, 236.
All right. So let's bring in our compatriot, the Viking of volatility, Andrew T. Giovinazzi, to hit on some of these major headlines and talk about what's happening. Welcome, Andrew. Happy Friday. You're muted.
There we go. Option Insider Radio and now Tradier. The mute button, I cannot find it.
So Andrew, what's your take on these non-farm payrolls?
I agree with you guys. Like I think they weren't as bad as people feared. Like yesterday, they stunk for sure, and today they smell, but not. It's not 10-day-old bad cheese. It's only like 1-day-old bad cheese.
Yeah.
Definitely a little softer. What's weird though, like living here in the middle of nowhere, you go into town, you drive, when I drive around my 1 day a week, there's still, listen to the radio. People are still looking for jobs. The shipyard in town, which is pretty big. There's lots of companies looking for employees. Like besides political ads, you hear people saying, "Hey, we need somebody to come work for us." So, the one thing this economy is good at is creating jobs. So at least the USA is. So I just think it's mostly I think it was a little bit of a relief. I think I feel, we've said this a lot that they weren't raising anymore. It's just a question of when they start lowering a little, and even if they need to at all. So, I mean, we're still producing jobs at this, at the current interest rate. So, maybe a 25 cut, though, some kind of goose before the election, it'll be probably political anyway. So it's like, hey, we're in it to help. And then
wait, the Fed is its own entity, Andrew. Come on.
I don't think a 25 basis point cut. This would be interesting. I mean, this would be the first time in the history of the world that well, I don't know if I'm making it's going to be interesting. No, normally falling rates are not bullish the economy. Now somebody tried to pitch me like, well, what if this is just a slight readjustment to a level, and then we baseline there? And I've like, has that ever happened? I can't remember.
I agree with you, Mark. It's usually when they have to start cutting, it's never good. But I still think the government's spending too much money, and if they just stopped and had some kind of if there was a rational picture for people to invest, a rational government spending picture, I think a lot of this, You know what the market is. It's 90% sentiment, 95% how people feel.
So most of the government spending, the biggest piece of government spending is servicing the debt on spending that's already happened.
All right. Well, lower rates will help.
So that is maybe one of the reasons why rates need to come down.
That's the only reason.
You know,
yeah. I mean,
so that we
they
can.
did it after World War II. We got Griffo telling us, the Fed can do those things as long as the government isn't spending the dough, right? And like the right hand is not talking to the left. And I think if there's any friction in the market, it's still that. It's like the Fed's raising and then the government's spending. It's like, do you guys talk to each other? You're all in Washington. Do you ever like sit down and say, maybe this isn't a great idea? But I haven't seen any semblance of sense out of either party. Maybe there's like 5 people in Congress that are like, maybe this isn't a good idea, but everybody else is like, go for it.
Yeah. Once you give people stuff that it's hard to take away. That's what it comes down to. All right. Now, next on the list, Broadcom earnings and the weak NASDAQ. Alicia and I kind of touched on this, but Broadcom had good earnings, weren't perfect, and it is getting smoked this morning, down 6.5%. How many of these major companies? I want to say only 2 of them had like really a nice positive move post earnings.
Right. I think you were right on this early, Mark. I like what you said. You've got to pick the most ridiculous earnings estimate, and if they don't hit it, since it's not perfect, they sell it. Because look at the level, look at the pricing. We have seen that .com boom, any stock.
Yeah.
I mean, all these companies are up 80, 90% in the last year, so they're going to give some back. It's just what I find is amazing though is actually Nvidia's up a little today.
Yeah.
And I think that's a good bellwether to watch. If folks can get in and buy Nvidia, I thought actually it would be doing worse today, to be quite honest, because there's just other stuff to buy that I think is a better value. But it's up.
Nothing's a better value than Nvidia, Andrew, except Apple, and that is it.
That's the only 2 stocks. Yeah, I think just Apple is one of those. I was totally wrong. I owned some puts. I got out of them at a little line. That was it. And I've never.
I think it's a sign that that is the safety trade. I think you've got you've got money moving in defensively into Apple, and that's why it's holding up the way it's holding up. I'm not sure that it's a great defensive trade if everything starts to correlate, but that is as per that massive candle from the carry bomb. But I do think that there is a
right to the bottom of
some real risk there
too, which I thought was
in Nvidia. I would wait for a close over 109 before considering going long.
Okay,
there you have it, folks. Close over 109, and you can consider going long Nvidia. But that's we've also had this just general overall weakness out of those names, and yeah,
I don't think it's going to change. I think you're going to get we're going to get very sideways. I mean, for the first time, actually, probably selling premium doesn't look terrible in these names. Maybe a little bit longer term, just because. I think the upside's a little muted here. Normally I would say no, but maybe I'd start to look at it now next week.
Yeah. So, yeah, it's gonna be a fun one. If the economy holds strong, holds this, if we do get the quote unquote soft landing, and the Fed starts dropping rates, I think there's real upside in small caps. And I would be looking at the Russell 2000.
I like that idea.
and we actually saw a trader buy a massive call spread yesterday in IWM.
Oh yeah.
If for October. Now, normally I don't really pay much attention to ETF flow because, so when I say flow, what I mean is large orders in individual companies. So like I pay very close attention when somebody buys a lot of call options in a name like, Triple M, money,
Right.
because why is somebody buying 38,000 calls in Triple M? Because they think it's going higher. ETF flows, though, like a lot of times there's so many different conflicting reasons for them to be buying this or selling that, that it can be a little bit confusing. But yeah,
Well, they can be used for hedges for so many other things
or there's
intertwined. Yeah.
or like they're trading IWM versus they're something in the Russell in the RUT big options, or
Right.
SPY versus SPX. So
You
many
never
different.
know.
They're very difficult to track. But sometimes you can tell this is just a straight up trade. And the trader was buying the October 222, 235 call spread, and they only paid like $2.25 for that.
That's
So
nice.
pretty decent risk reward. Good 2 months to 1.5 months to expire. And basically you're looking to take out the old highs. We like that, or we just, or how? What do you think?
Well, I like a 10-point spread around $2, but it is a little further out of the money. What is it?
It is
11 points out of the money, but may
Don't
not be
hate it.
good.
Yeah.
Don't hate it. That's a good.
Don't hate it.
Yeah. So
6 or 7 weeks helps.
all right.
Yeah.
So Leisha, you were looking at. By the way, you were deeply missed last week.
Oh.
Everyone said, "Where's Leisha? Where's Leisha?" But
Thanks, guys.
you wanted to look at a couple of quick names that you think could be heading lower. And I kind of tend to agree with you on these names. What are you looking at for shorts?
I tried my darndest to find some bullishness somewhere, and I honestly didn't see it. I mean, maybe today will change some markets or some charts, but I only saw a couple of toppy stocks. Yes, Tesla. I do have it up against some resistance if you want to look at it. Johnson & Johnson has had a really nice run since July 9. Straight up, it took out the previous high. Now we're at the top of my pitchfork, a nice big doji there at the top. Yesterday we had some confirmation. If we can clear 165 on the downside, I would say you could ride Johnson & Johnson to 161, maybe even 158.
Ooh.
For sure 161. But make sure we clear these little, this low of Tuesday.
All right.
Which kind of lines up with that high.
And then
clear that today and hop on some puts.
And then the other one you were looking at as a potential short were the financials.
XLF.
Yeah.
They've had a nice run also.
There. Yeah, they had a really nice run.
And
this
also
is a curious one for me too, Alicia. Like JP Morgan or Goldman, because all of a sudden they looked unstoppable, and now
they did. They have. I kind of like XLF. It's easier, it's smaller. Use the stop loss here, 45 half. But to me, this yesterday has negated this little bull flag. I think you can at least squeeze a buck out of it, come down here, 44, and then maybe even 42.85. And next week's puts right there are like 50 cents. You might be able to double those. We trade down to 44. That's in Profits and Pumps, by the way, came out. Also, look at RSI. RSI came back down into past the 70 mark, you want to, it's going negative. MACD is just beginning to curl negative.
All right. Well, I do like Oxy. I don't want to look at that because we're going to be looking at that one in the ticker highlight show. That's every Monday at our our VIP OP live room. But I think I feel like I've traded this multiple times, but I'm about to get back into Qualcomm today. It got absolutely thwacked, and I'm actually taking a hard look at GE. So Qualcomm looks like it might get a little double bottom here. That's at the bottom of the pitchfork, and
Yes, it is.
And I'm liking this one to pop back post haste, and so I'm liking that one. And then I'm keeping a tight eye on General Electric. I don't know if you saw it's had a very sad week.
Oh yeah.
But if it can
Bad Tuesday.
Yeah, really bad Tuesday. But look at that bottom of the pitchfork. I think
Yeah.
it's looking like it's an interesting long.
Now, when you have these big red candles, though, you need to bust up bullishly into at least halfway up that candle.
Yeah.
Before going long. So you'll get a little resistance here, 169.63 at these lows. But above that, yeah. But then 175, you have some. But breaking out above that, you'd be 180.
Yeah.
So
well,
wait till you get halfway up through that very large red.
So what level is that? About 167, something like that?
Yeah. 169.
All right. So you have GE above 169. I'm going long, folks. You heard it here first. GE above 169. Sebastian, long. You heard it here first. Only here on OP Live.
Blue horseshoe.
You know what the most GE's most one of their most profitable businesses is jet engines, and they've recently acquired a new customer. They're now selling jet engines to what might be the best vehicle manufacturer in all of North America, and that is Andrew's trading vehicle. So let's hop on the vehicle that is now powered by jet engines with Andrew's trading vehicle.
If you could put up my chart. So here we are. So one stock I would not sell premium in. Nvidia. So I think the AVGO earnings, taking some of the bloom off of this. And one thing I know, so when I look at stocks to buy options in, one thing is I like seeing, like on the bottom end of that chart is implied volatility. The red and yellow line is 30, 60 days. So generally you're at kind of the bottom of the range. Not the dead bottom, but low enough. 90-day volatility is the purple line. So over the last, 3-6 months, volatility, so NVIDIA has become a little more volatile and a little less straight up. That's how I read that. So, when you have a pickup in volatility, buying options gives you a better shot to make money faster, and then you get out. So I like NVIDIA strangles right now. I bought some yesterday. We'll see how they do. I'll hold them for like 3 or 4 days. And I'm interested to see how, I thought AVGO earnings coming out, we might get a little bit of a move, but it's holding up better than I thought. So I bought the 105, 115 strangle, leaned a little short. Be in it for probably till midweek. See if we get any kind of action there. And there it is. So like other stocks that are kind of stuck, like Microsoft, maybe Amazon, things like that, you're seeing sort of similar things. So what I would want is the stocks kind of have to start to settle down somewhat. I mean, NVIDIA looks like it might be slowing down on the downside, but with, earnings not great in the sector or the market not reacting great to them, I don't think it's unreasonable that NVIDIA might try to, make a run below 100, and then I would get out of my strangle. But if it doesn't and just decides to roll back up to 115, I just probably close it for, a scratch and be out. So I think it's a relatively cheap shot for buying some juice for the next 3 to 4 days and see how the market reacts to this earnings report. Does it pick up a head of steam, or do we kind of go into the basement again? And since NVIDIA is a leader and it's definitely been moving, I think premium in there looks pretty good. So that is the trading vehicle for today.
All right.
That's a fun ride, Andrew.
Yeah, thanks.
Right?
I like
know.
the new. I like the new.
Is it gonna do it or not? It's kind of like, is it gonna do it or not? That's kind of. When you were talking about it on the chart yesterday, I'm like, well, it lines up for me well that way. Everybody's like, oh, let's buy it again, or we all get sad and it goes to $100. Anyway,
well, I like the new propulsion.
And implied bell doesn't look too bad.
In NVIDIA, no.
Yeah.
50. I mean, 50 for NVIDIA, no, it's not.
It's not bad at all.
Expensive. Could be a fun one to play around with.
We'll see.
Could be a very fun one to play around with.
So are we positive now?
Is Chipotle just on a Alicia Chipotle special here?
Yeah, we had a couple of chart requests. They wanted pitchforks on a couple of names. I'll give them the one. CMG.
Chipotle has broken down below my. How's that look?
Is it possible for this stock to actually go down for a while?
I know it has. I see support 52.14 and below there 50. Nice rounded number 50. Watch those previous lows of 48. I would say you have to clear these highs. You have to clear 56.5, and then maybe you'll get your run back up 63.5. Okay. You may just wallow in here, which is a good range if you want to, buy here, sell here.
I think it's one of the more overvalued stocks out there, and post split, a lot of times stocks kind of wallow for a while.
Down. Here's the split right here. It's been straight down.
Yeah.
Have we seen the stock do well post split this year?
Not really. Stocks tend to wallow. That is a long-term.
Walmart.
That is a well-known. Walmart. Thank you.
That's the only one.
Walmart's a superstar.
Yeah.
It's the Leisha of stock splits.
My parents are in Arkansas. They are huge Walmart fans.
Yeah.
And they love the stock, which I'm happy for them. Look at this thing.
I know.
This split way back here. It's the only one that went up.
And I didn't know this but Walmart over the last 2 or 3 years has outperformed Amazon by like a jillion. It's not even close. Well, Amazon's definitely been wallowing around. It's not that it's not a great company, whatever, but
it's a silent superstar.
Yeah, I mean, Walmart has been, Amazon has their focus across so many different areas, right? I think Walmart has really, if you look at Walmart Plus versus Amazon Prime, experience is basically the same thing now. Walmart's caught up to them technologically when it comes to retail.
And they have the store footprint. I mean, they've
got the store footprint. And because they've got the store footprint, that it puts them actually for same day pickup, or they have some competitive advantages there.
Their stores have improved by a mile. When I go, they have grass-fed beef, they have wild-caught mahi and salmon, and I mean they have all the good healthy food you're looking for. They actually have it.
Well, and the interesting thing is they're also eating the dollar store's lunch. I don't know if you've seen. Take a look at the charts of Dollar General, Dollar Tree, Five Below. They look terrible. like just
Yeah.
awful.
Holy gosh.
Dollar Tree.
That's
Dollar,
like dumping off the chart.
It's
yeah.
funny because
Dollar
those are the
General
only
looks maybe
stores.
worse.
Those are the only stores you see in Arkansas, or Walmart and Dollar General.
Yeah.
Or in Maine.
Yeah.
In the rural areas. Yeah.
Dollar General. I mean, 5 looks terrible. 5 Below.
Oh, wow.
Yeah. I mean, these discount places, and frankly, long term, and I'm going to, folks, write this down. I think that in about 5 years, we're going to be talking about Target the same way we talk about Macy's right now, because they are so far behind technologically, and from behind Walmart and Amazon. They have not invested in the Target online business, in the Prime, their Target version of Prime. They've not invested in that piece, and they have missed the boat. And that is going to long-term haunt them.
Yeah, Target is not, again, right after that gap up, not performing well.
So write that down. And in 5 years, when this is a let's see, where's Target's? Where's
Well,
Target?
look at Walgreens, WBA.
When Target, yeah,
Oh
when
my
Target,
gosh.
when in 5 years, when Target is $38, remember I warned you.
Look at Walgreens. Wow.
Like, it's literally a tale of how to manage a company well, Walmart, how to manage a company poorly, Walgreens.
Well, Walgreens, CVS doesn't look a lot better. I think the drugstore chains as a whole, that whole industry is sinking.
Right. I think they tried to get into healthcare post-COVID, thinking there was a boom there, and Walgreens is basically selling all the assets for nothing at this point. They're just, it's a massive restructuring, I guess, just getting smoked. And they're also getting hurt from, I guess, pharmacy margins are going down, all that stuff. So,
isn't there a lot of that being done by mail too now, right? Getting your meds through the mail.
Yep. So it's definitely rough.
I mean, the problem with Walgreens and CVS is they're basically a liquor store that sells your pharmaceuticals.
Yeah, but they just started selling liquor recently, like in the last, I don't know, so many years. For a long time, they didn't have alcohol.
Take a look at what happened to the chart once they started doing that. They lost focus.
Yeah.
I think it's funny because you go to Walgreens, you see the healthy sign, like health starts here or something like that.
Yeah.
And right above under that sign, there's cigarettes. And then over to the right, there's the vaping stuff.
Wine.
And then there's, buckets of, bottles of wine and just junk.
And then the next aisle, you can buy all the Sour Patch Kids that you need.
Right. Then you can go buy Ozempic or whatever that is.
Yeah, exactly.
To go back a little further.
All right, so folks, we're running up against it. Heading into the bell, NASDAQ futures are still down about 0.1%. S&P futures have swung to green. We're up about a little bit less than 0.1%. Russell futures are down about 0.25%, and Dow futures are flat. What are you guys thinking for the rest of the day into the weekend?
I'll go first. I'm thinking maybe we could get another little spinning top here. I don't know. Maybe people are still out this week, short week. Maybe we get another little spinning top, and then next week we'll tell.
Yeah, I don't see a lot of action. I would like the market to go up. So when I say that and it comes out of my mouth, I feel like we're probably not going to. But I would say look at the vol today, because if there's some confidence there, VIX is around 20. there's some dough to be made selling premium. I mean, we've had the one big move this week, but after that, we haven't done much. So I'm trying to decide, like, I feel like the market's like, are we going to go into recession and do I need to start dumping? And I'm not sure traders are there yet. So I think this orbiting market we have is going to be with us a little while. The question is how big are the ranges? Like, we had up almost 2% from the bottom last Friday and then a 2% drop on Tuesday. Are we going to keep seeing that? And I think that's, if they start selling VIX down like 8, if we get to 18 or below by the end of today, I think some of that's going to subside. So, and then we probably, maybe up 0.5% or something like that. But that's what I think is going to happen, mostly because we didn't sell off like crazy this morning.
Yeah, we tried.
We tried, but it didn't happen.
Your turn, Mark.
I think they're going to pull the rug around 11 o'clock this morning.
All right.
All right.
11 o'clock.
We're gonna close. I think we're gonna close day down 35, 40 points, less than the straddle, but below those major averages, enough to get people worried. And then we're gonna take some heat next week and when's the Fed meeting? The 18th is the announcement.
So you got 2 weeks to wait.
Yeah. So we're gonna take some heat. We're going to take some heat early next week, and then they'll start buying it the 16th and 17th into the 18th. And then
they'll slam it again.
Because what they're going to do is cut a quarter point, and then Powell's going to say, that's probably enough, or we're going to take this at a measured pace, and we're going to, no guarantees for another rate cut in December, and the market's going to be like, what? And
right.
He's gonna, so I think we're gonna have a rough week next week, but that table gets set today. Final close 54.7138 for the S&P 500. All right, well, folks, we're actually a little over time, but so you got a little bonus time with me and Leisha and Andrew. So for the Andrew T. Giovinazzi, the Viking of volatility, and of course, Leisha J. Leslie, Queen of the Candles, the Duchess of the Doji, I am Mark Sebastian. I am your only option. This was Option Pit Live. Thank you, Ruben.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.